Welcome to the journey that many of us have embarked on with excitement and the desire to change our lives, the journey of becoming a trader. You begin with dreams of skyrocketing account balances, luxurious cars, lavish apartments, and extravagant vacations. But what's the reality? Are you spending hours every day glued to the screen, tracking every tiny movement of the market, letting it dictate your emotions? Winning a trade makes you feel like hitting the jackpot, but losing one leaves you crushed. Gradually, these emotions seep into your daily life. You become irritable with your family, forget the laughter of your children, and no longer have time for family dinners. You're afraid to place trades because every decision feels like a gamble. Just one market crash and you could lose everything. But you can't stop. Those groups, those so-called experts giving out trade tips, those sure win strategies, all of them lead you to a familiar outcome: loss. Even worse, you are surrounded by images of fake success, pictures of luxury cars, fancy restaurants, and promises of life-changing opportunities in the blink of an eye. These entice you to trade more, and in the process, you lose not only money, but also your time, health, and cherished relationships. Do you see yourself caught in this spiral? This isn't just your story. It's a story of thousands, even millions of traders out there. And the biggest question remains: do you want to keep wandering aimlessly, or will you stop, reflect, and change? Let's find the answers together before this dream turns into a nightmare. Here are 3 types of mindsets that every trader must avoid as soon as possible. 1. The inertia of change, the biggest obstacle for any trader's success. Have you ever wondered why you keep struggling with trading, never advancing, and constantly feeling stuck in your strategy? Perhaps you've thought, if I just stick to this strategy, it will work again someday. But what's the reality? The market isn't a static picture. It's a continuously flowing stream, and if you don't adapt, you'll quickly be swept away. Think about this. You're clinging to a trading method that once worked, but is no longer aligned with the market. You're afraid to change, afraid to experiment with new approaches. Why? Because change feels risky, and that sense of risk brings anxiety, even fear. But remember, by not changing, you're not just standing still, you're falling behind the market. Many traders believe that to improve, they need more indicators, more tools, or to try increasingly complex strategies. But that's far from the truth. Change doesn't mean complicating everything. Change here means refinement. Understanding when to enter a trade, and more importantly, when to stay out. Don't think that not trading equates to laziness. Sometimes, staying out of the market is the smartest strategy you can adopt. There's another common trap many traders fall into: the obsession with short time frames. Do you often find yourself glued to time frames like Monet, M5 or M15? What happens then? You get caught up in tiny fluctuations or the constant pings of price movements, leaving your mind in a state of tension and chaos. But did you know that longer time frames like H4, daily, weekly, or even monthly can give you a much clearer picture? These frames reduce the noise, reveal long-term trends, and help you make more informed decisions. One more thing to beware of: brokers and trading platforms often want you to trade as much as possible. They don't care whether you win or lose. They earn money from every trade you make. So don't let them convince you that you need to trade constantly. A smart trader only enters the market when there's a clear opportunity. If the market is choppy or uncertain, staying out is the wisest choice. Remember, failure isn't your enemy. Failure is your teacher. A great trader isn't someone who never loses, but someone who learns from every mistake. After each unsuccessful trade, ask yourself, where did I go wrong? Is my strategy suited to the current market conditions? What can I refine to do better next time? The market doesn't care about your past successes. It only cares if you're ready to adapt to the present. A trader who resists change is like a warrior carrying outdated weapons into a modern battlefield. Survival is unlikely. So, starting today, make the decision to change. Refine your trading methods, step out of your comfort zone, and become a trader who can adapt to any market condition. Remember, change doesn't just help you survive, it helps you thrive. 2. Lack of money management mindset, the foundation for sustainable trading. Money management in trading is not merely about avoiding losses. It's the art of managing resources effectively to achieve sustainable profits. Unfortunately, many traders fail to understand or underestimate its importance. They find themselves stuck between two extremes, overspending and extreme frugality, both of which lead to failure. Some traders get caught up in the dream of getting rich quick with just a few large trades. They're willing to place trades with sizes far exceeding their account's risk tolerance, believing the opportunity is too good to miss. But financial markets are unforgiving. A significant downturn can wipe them out, leaving them without both capital and the opportunity to recover. This is like a small business putting all its resources into rapid expansion without considering market risks. A minor disruption is enough to drive the business into bankruptcy. A smart trader never lets greed cloud their judgment. They understand that every trading decision must be carefully calculated for risk. Conversely, some traders avoid risk to an extreme degree. They shy away from placing trades with sufficient size to capitalize on opportunities because they are obsessed with preserving their capital. As a result, the profits they make are often too small to justify the effort and time they invest. Over time, they lose their edge, much like a business that hesitates to invest and therefore cannot grow. Such traders trap themselves in a cycle of false security. They forget that, in trading, avoiding risk entirely also means forfeiting the biggest opportunities. Look at trading in financial markets as running a business. For a business to survive, it doesn't just need revenue, it must also optimize costs, manage cash flow, and invest wisely. Similarly, in trading, money management is not only a way to earn profits, but also a resource to protect you during tough times. I often optimize by waiting for the right moments. This is the same approach a business takes to optimize resources, investing only in projects with high potential returns. One well-timed trade is worth more than 10 rushed ones. That's why I constantly remind myself that timing and psychology are the two most powerful weapons a trader can have. Effective money management strategies. Always keep risk under control. Never let a single trade jeopardize everything. The golden rule is to risk only 1–2% of your total capital on each trade. Take risks when necessary. Don't fear risk to the point where you avoid investing altogether. Learn to identify opportunities and seize them when the conditions align. Optimize by waiting. Just like a business invests only in high-value projects, wait for the market to provide clear signals before taking action. Set realistic goals. Avoid trying to make quick money. Instead, build profits sustainably, step by step. Manage emotions. One of the most critical aspects of money management is controlling emotions. Greed and fear are the biggest enemies of a trader. Maintain a reserve fund. Just as businesses need contingency funds to navigate crises, you must keep a portion of your capital reserved to protect yourself during adverse market conditions. What many traders fail to realize is that staying out of the market is also a crucial part of money management. When the market is volatile or you don't see a clear signal, taking a break is the best way to protect your account. Never let the pressure of having to trade push you into making poor decisions. 3. Blaming others. The biggest barrier to growing as a trader. When the market doesn't go your way, when your trading account suffers a loss, what is your first reaction? Do you blame the market for being unfair? the broker for manipulating, or external factors you believe are beyond your control? If your answer is yes, then this is one of the most dangerous mindsets you must eliminate immediately. Blaming is the easiest reaction because it allows you to avoid facing personal responsibility. But this very habit prevents you from ever growing or learning from your mistakes. When you constantly blame things outside your control, you inadvertently give away the power to control your trading outcomes to others or random factors. Remember this, the market isn't wrong. How you respond to it is the issue. In trading, failure is inevitable. But the difference between a successful trader and a failing trader lies in how they face failure. Successful traders aren't afraid of mistakes. Instead, they're willing to review their trading plan, strategy, and mindset to draw valuable lessons. For them, every failure isn't an end point, but an opportunity to improve. The stories of successful traders show that instead of blaming, they often ask themselves, where did my trading plan go wrong? Is my strategy suitable for the current market conditions? Was my mindset stable throughout the trading process? These questions help them not only identify the reasons for their losses, but also build a stronger foundation for future trades. Trading isn't just a job, it's a continuous journey that demands not only sharp market insights, but also self-contribution. There are times when you need to let go of short-term ambitions to focus on long-term goals. Letting go doesn't mean giving up. It means accepting that the market won't always deliver what you want. Instead of trying to control everything, focus on what you can control: your trading plan, strategy, and mindset. A good trader doesn't just measure success by the money they make, but also by the balance in their life. They know when to stop, when to rest, and when to dedicate time to themselves and their families. This balance not only helps them make wiser decisions, but also creates a more meaningful and fulfilling life. Trading in financial markets isn't just about making money. It's a lesson in character. The market reflects your weaknesses clearly: greed, fear, impatience, or overconfidence. But it is also where you have the opportunity to develop and overcome them. Truly successful traders are those who know how to conquer not only the market, but also themselves. They understand that the market isn't an enemy. It is merely a mirror reflecting their mindset and actions. And only when you accept this can you truly master your trading journey. The life of a trader is a long and challenging journey, but it's also an opportunity for you to learn, change, and grow. Avoid the mindset of blaming others and start taking responsibility for every trading decision you make. Remember, failure isn't what's scary. How you respond to failure is what determines whether you become a true winner. When you dare to take responsibility, embrace change, and manage yourself well, success is not just a possibility, it's inevitable.